You will know in advance, based on testing and paper trading, exactly the optimum amount that you have to risk. In other words, what your risk is on each trade, and it's not going to be it's not going to be a varied amount. It's going to be a specific amount, whether it's in terms of dollars or distance. It will be a specific amount so that you know exactly how much each trade is going to potentially could cost you. And it should really be set up as a rigid profit potential too. In other words, I don't want you making subjective decisions as to about how far you're going to let the market go in your favor. So if you can get a set of variables, well, let's say you even 2 to 1 or even 1.5 to 1, 1.5 to 1, meaning that if I have to risk 1 point of something, even if it's, let's say in stocks, if I have to risk $1 to make that my particular set of variables, my entry variables, will get me into a trade where if I risk $1, I'll get $2 60% of the time or 50% of the time. Then that's what you do. You do 2 to 1. There are trading methodologies that can be even the opposite. You can even go 2 to 1 here, meaning you can risk 2 to get 1. But in these cases, the trade has to be 80 or 90% correct. You can do it any percentages you want as long as it is fixed. There is no wiggle room. There is no subjective decision making whatsoever. Am I really clear about this? There is no subjective decision making whatsoever. Go ahead.
The big things in expectancy or in trading with risk-reward ratio is you don't know which trade is going to be the winning trade.
Correct.
And typically you try to let your winning trade get stopped out on your winning trades. But what you're saying to us for this exercise is that we take a fixed stop. I understand the fixed risk, but a fixed essential profit stop.
You know what? If you can set it up as a trailing stop, if you can set your trailing stops up where you're not making any kind of subjective decision, you can do that too.
So it doesn't matter as long as it's defined.
If you're sophisticated enough to do that, then yes. Okay, most traders in these situations are not. That's why I make it real easy. Okay, as long as you're not making any decisions.